Okay, boys, this is the 4-hour chart for BTC, and you can see how it bounced from the last support of 20,700, 900 to 600 region. That's the region, I guess. Yeah, it's 790 to 636. So that's a very small sport, but it acted very strong because it was like sliding down and then it started bouncing, and it has taken two sports here. Now it is back to testing the resistance zone. So if BTC closes above this resistance, that would be bullish. We'll wait for the pullback, we'll wait for the retest and go long. Sorry to say, I'm not thinking that it will
You know what
happen.
I was thinking? You know what I was thinking, Zish? Like, I know you have this trouble like with longing and stuff. What you should do is that you should invert the chart and then like draw, you know, and then draw your like break line there, and then when it breaks, you'll be like, oh, short, you know.
Okay, boys.
You're
So
actually
we'll
going long.
we'll wait for breaking this resistance. We'll wait for the retest, and then we'll wait for
Okay.
then our TP will be 15K. Okay, that is the fun part. So let's get serious again. All right. So okay, this is the inverted chart. So you can see how BTC is taking support. So we should long here and go towards 20K. But let's wait. All right. So we have the weekly closing. We are expecting the volatility. So I won't be trading until like tomorrow Asia session. I won't trade that much. Actually, I'll be trading, looking for trading in like just before the New York session. So we'll see that. I'll wait for the Monday ranges as well. Do not take big positions. Do not, if you want to take a position, so first you should know how to calculate that. And for that, our friend Brett created this beautiful sheet. We have the website as well. I'll explain both. So now we are going to the main point of how can we calculate position size. So let's say you have $1,000 portfolio, and I have opened a trade actually, which I gave recently, the off trade. So yeah, again, I'm gonna give myself a little boost for that. So I'm just gonna discuss that off trade, off short. So let me just go there. Okay. So if someone gives you a trade, and how will you look to enter in that trade? How can you calculate your position size? So what you have to do is, let's say you have $500. I'm just gonna make it even easier. Let's say you have $500. Whatever your portfolio size, whatever your trading portfolio size, you will enter that here. And you can see I have mentioned that the entry is 105.90. So I'm just gonna take the entry as 106 here. You can use the decimal point, it doesn't matter. I have mentioned the stop loss as 116.56. Your position size will always depend on your stop loss. It doesn't depend on your profit. It doesn't depend on everything. It depends on the entry and the distance between your stop loss. If it's a tight stop loss, your position size will be big because you are risking, your RR will be actually better with that tight stop loss. And the leverage, I always say that leverage doesn't matter, because if you are using high leverage, your margin will be small. If you're using low leverage, your margin will be different. So we always say portfolio risk no more than 3%. So we'll stick with that. So $500, 3% of $500 is $6. Okay, leverage, let's assume you're taking 10x. So you can see how margin is changing with the leverage. Your position size remains the same, but the margin changes because
Of your leverage.
yeah, because you're increasing leverage or decreasing leverage. So you can see how with 25x the margin is just 6, how with 10x the margin is 15, how with 5x the margin is 30. So it's the multiplication, but the position size will remain same until you change your stop loss. Let's say if I had the stop loss of 110, your position size will increase, eventually increasing your margin. Because it's a tight stop loss, you will lose those $6. But when 3%, all right, 3% loss is actually $15. Sorry, I was considering margin as your position loss. You will lose that $15 with the move of, if that coin moves from 106 to 110. If that coin moves 115, you can see now you have increased your stop loss. Your potential loss is still the same, but it will decrease your position size because your RR is different, because your stop loss is not tight. That's how it works. That's why I prefer scalps, because we get a better RR, we get a tight stop loss. Swings just take away that high RR, but it doesn't matter. You can be profitable in both ways. And you can see if I change it to 110, how position size increases, how margin increases, and the difference will be in your profit now. Let's see. You can see these lots are actually the amount of like 3 of you will be shorting. So 3.75 means you will be shorting 3.75 of here in quantity. So let me just try if I can write that. So I'm just going to write 3.8. Entry was 106, and our TP was, I think, 80 point something. It went like 80.7. It was 80.5 or something. So I'm going to take TP as 81, and that was a short trade. So I'm going to stick with that. Again, I'm using 25x. Doesn't matter. It just changes your margin. You can see initial margin is 16. If I go back to 10, the initial margin will be 14. It just change your initial margin with the leverage, but the position or size will remain the same because of your stop loss. And you can see how you would have made $95 with that trade, just risking 15. So that is like 5 RR trade. So that was a good trade. So you can understand this sheet is perfect. You just need to put in the numbers. If I give you a short for, let's say, short BTC at 21,500, which I am doing, but let's not talk about that. So 21,000 stop, let's say stop loss is 22,500, and your leverage is, let's say, 100x, which I use usually with BTC. Does it matter? No, because your margin is 3. If I use leverage here 10, it will be 32. You can see how it changes. This size will remains the same. So if you are using 100x leverage and your stop loss is 22,500, entry is this, your risk is 3%. If stop loss hit, you will lose $15. Let's go back to here and let me just.
I think with 100x, I think the maximum you get like prior to liquidation is about $500 or something.
Yeah,
around that number.
Maximum position size decreases with that. Yeah, exactly. You are right about that.
Yeah.
So that depends what amount you are risking. So it doesn't matter. Let's do this. 125, 21,500 is our entry. Exit price, let's say I'm hoping for 19,800. And the quantity it shows on here, what was it? 0.02 BTC with that percent risk. So let's do that, 0.02. So you will be, your initial margin is 3.44. You will be getting a $34 for if you're doing this trade, and your stop, like if you, the loss is 15. Again, we always say that do not take a trade if the RR is less than 2, because that doesn't make sense. Why would you say that? Let me just show you quickly. Let's say you have $1,000 and you're risking 3% on each trade. So let's say you lose first trade, so you will be left with 970. Let's say you lose another trade, you will be left with 939 something, actually 41 something, because this time you risk, if I do this quickly, 970, yeah, 29. So you will be losing 29. So I'm just 940. You will be left with 940. Now you take a trade. The RR was 3:1, and that means you will make 3% on your entry. So you were losing $30 each time. Now you made 3 times 30. Since RR is 3, so let me just do that quickly. 30 times 3. I need the equal to sign as well. That gave you $90. Now you add 90 in 941 plus, let me just add that equal to sign, sorry. 90 plus that, sorry, come on, where did it? Oh, sorry about that. So 941 plus 90 which you made, you're above your portfolio size again after losing 2 consecutive trades. That's why we say that risk management and position sizing is important. If you are not doing this, if you're losing different money, let's say you are using random amount every time, so if you lose first trade, you will be lowering your position eventually, because if you lose $100, you will say no, I shouldn't risk that much. So you will be risking 50 again, and you will be decreasing your position size. Even if the TP hits, you won't be able to get back to your initial portfolio, because this time your position size was different. So that's why I say that always stick with the 3% rule. Even if you lose 3 trades, 4 trades, you will get back the money quickly than you will losing because of high RR trades. I hope that makes sense. Let me just check CZ printing area. Okay. All right. So yeah, let's see what else. Okay, this website again. Let me show you how this works. So let's say you have $1,000 portfolio. You can use any coin here. You don't have to change even BTC here, because it wouldn't, you are putting your initial entry and exit, so it doesn't matter. So let's say you are risking 3%. Your leverage is, let's say, 10. Let's stick with the 10. Again, entry is 105 106. I'm talking about the of, and your stop loss is 116. Your initial portfolio is 1000. You're shorting here because your stop loss is above. So that gives you, here you can see how this calculates that the risk is $31 on your 3%, and your end, okay, your total margin, oh, margin is 31, your risk is $30, and that means that you will be shorting 3 of here, maximum order size. So this is your margin. With the margin multiplied with your leverage, the position size will be 300. Here you can see there is $318. So this is how you can use this website, or you can use this Excel sheet quickly to calculate your position size and everything. I hope it makes sense to you. Now let's quickly talk about FIBs, and then we'll get back to the discussion. Okay, FIBs, Fibonacci number, that's actually a Fibonacci series. And how do we get that series? Let me just quickly tell you that. Okay, so how do Fibonacci works? How do we calculate that? Fibonacci was actually a scientist. He created a series by, what he did, he added the previous number into the next number to get the next number. So 0 plus 1 gives you 1. 1 plus 1, that gives you 2. 2 plus 1, that gives you 3. 3 plus 2, that gives you 5. 5 plus 3, that gives you 8. So this series works like this. You go on increasing, adding the previous number, and that will give you the next number. Adding the previous number, that will give you the next number. If you, okay, Fibonacci numbers are important in nature as well, because you can find them, you can find the Fibonacci sequence in your life, in our real life as well. The number of set of teeth, the number of petals on a flower, the number of branches on a tree, they all follow the Fibonacci golden ratio, I guess. How do we get that? Fibonacci golden ratio works like, let's say you divide 5 by 8. What do you get? If you quickly check on your calculator, if you divide 5 by 8, you will get 0.625, which is your golden fib ratio, 0.625. So you divide the number with the next number with the previous number. previous number with the next number. That's how you get that. If you divide 3 by 8, you'll get 37.5. So which is again a golden ratio of Fibonacci. Sorry, not a golden, but a ratio of Fibonacci. And this is how you get those ratios. And you can find these ratios in our daily life as well. Now these are just percentages to look for. Stock can go up, or a coin can go up, or whatever you are looking at. This is what they used. I don't know what is happening. Let me just reset this and delete everything. Okay, so this is Fibonacci numbers. Here we have this Fibonacci tool. This is Fibonacci retracement. Let me show you how it works. So you go from left to right. You pick the lowest point. You go for the highest point, and that gives you the Fibonacci numbers in the sequence. And you can see how it respects each ratio every time. This is beautiful. You can see how it bounced, how it got rejected from here and came back to test this region and then came down. Let me show you one more thing. Okay, well, this is your BTC monthly chart. This is going to be something interesting. This is where your last impulsive move started. This is the bottom here, right? So I'm going to take this bottom, and this is the top of that. And you can see how BTC is at 0.786 level, how it has retraced 78%, and it actually bounced from here. So you can see this is your monthly chart, and this is the level it is respecting right now. After that, I think it is going for my 85% level. If you know about that, it's, you know how it works. All right, so this is your last impulse. I actually wanted to show you something else as well. This is the bull start, right? This is where the bull market started, and I'm going to take this bottom here, and you can see this. Let me just show you something. This was your higher high, this was your higher low, this was your another higher high, this was your another higher low, and here the trend stopped. Here the uptrend actually broke in monthly chart. So I'm going to take till here that we had the bull market till here. And after that, we broke the bull market, and now we are, maybe a bear market has started. Maybe we'll go back again up soon. So look at this move. It took how many days? 730 days. It was a bull market of 730 days. And we are just tired by how many days? I'm going to take
5 months or something. Yeah, 150 days or something.
Yeah, so yeah, that's like 130 days. So the 4 or 5 months. So you can see how long lasting this bear market can be. It's actually 140 days. So don't think it will be over soon, but that doesn't matter, because I recently, in the recent update, I told you that just trade your zone, just trade your range. Doesn't matter if it's bull or bear, you can make money. We can make money go up, we can make money go down. You might think I am a bear, but it's not true. I just want discounted BTC to load my spot bags. I'm not buying here. 20,000 is not my buying range. Sorry, I can't buy here. I'll wait for 14,999 for Rajat to send me a BTC, and then I might start taking spot position. So these are the numbers I'm looking for. Okay, this I hope you understand how to use fibs. Again, if you want, let's me show you CG's chart, where actually we had the trade, and someone asked me what ranges you would be looking for the lower ranges. If I remove everything here, you just need to draw the fib from the last impulse move. So you take the bottom here. This is where it started going up, right? So you take the bottom, you go for the top, and you can see how it respects every fib number. And this is so this is how it works. One more thing.
I saw that.
0.
Is it true? Because I see that
0.5
I see
level
stuff like
is
that too. Like my wife paid off my house. Or
0.5 level is there, but that's not a golden ratio of fib. That is just that you
So, so sorry
most
to interrupt you.
yeah, yeah. All right.
So,
So 0.5
bro,
is
your voice is like lagging a bit.
it lagging for everyone or is it
Hello.
just lagging for Rajat?
You're all good, mate. I can hear you well.
Rajat,
Okay, let me see.
it's for your internet maybe. 0.5 is not a golden ratio, but it's the most number, like most retracement happens here. There is another fib that is called fib extension. How can we use that? Okay, you see, if you know about Elliott wave, that there is always like 5 moves for the uptrend, and where is that? So 1, 2, 3, 4, and 5. Like there is a whole rules about these impulses that 4 cannot go in the one territory, 1, 2 cannot go that much below. There is a whole rule set of rules for that. I'm not going to discuss those. So what they do is they use fibs here. They use fib for this, and they see how much it retraced this time here. Like let's say it retraced for this is 0.5 level, 0.618. Okay, so they calculate the next move will be how much, how long. So what they do is they use trend based fib extension for that. They will use it like this: go from your initial point to first and go for your retracement point, and that will give you your next targets for the move. So this here, these will be your targets for the next move, how high that can go. So this is how you use fib trends, and this is actually used in Elliott wave mostly. So you use fibs with other analysis as well. You can't just trade on the basis of fibs. So you need like support and resistance or everything, anything else. So let's say this is the most retracement we were going to get on this coin. So what I will do is to use fib extension. So I'll use this point I was using for the impulse. So this bottom of this, go to the top of the next and go back to the bottom of this. Now this means that the first target, if this was the bottom, if this was the retracement, and then it's eventually going to go up. So that these are the most probable targets. People actually go for like 100% and 0.286. That is the one they consider the main target. You can book partials anywhere, but like they are actually targeting for that point. So yeah, this will be the main target here, and you can see how it happens mostly. And you can see this is actually a 63% move. I think this will be then 32% retracement maybe. Let me just make sure, check. This is actually 24% retracement. All right, so this is how you can use fibs trend. Okay, I'm gonna stop recording, and session is actually about to end, so we'll start